Swayam Prabha. Digital India. Educated India.
Hello dear students. In the present module, in this particular video, we will be discussing about penalties, which are there, which may be imposed, which may be, you may say, uh, which may be imposed on a particular, which may be levied on a particular assessee. In case some, you may say, provision is not complied with, as are there as far as Income Tax Act 1961 is concerned. And in this brief video, it is not possible to include each and every penalty. So, and first of all, you should note that penalties and prosecution, basically it is a combined chapter, but for the sake of simplicity, I have divided it into two portions. And in the first part, we will be in this particular part, we will be focusing on penalties. And in some other video, in the next video, we will be discussing prosecution. But still, I am once again mentioning that it is not full-fledged. It is not possible to cover each and every penalty in this part. So we will be discussing major penalties. Now, first of all, dear students, you should know what is a penalty and why it is there. Why it is there. So kindly note that penalty is basically imposed by income tax authorities. Penalty is basically, what is penalty? It is some sort of fine. It is some sort of fine, and it is our duty. It is our duty that we should be abiding by. We should be complying with each and every provision of income tax. Otherwise also, in case we are not, say we are moving on a road, and at that particular point of time, we have to abide by various traffic rules. Otherwise, penalty is there. Otherwise, challan may be there. So in the same way, in case while dealing with income tax, we are not doing our duty. We are not sincere, and we are not obeying the law. In that case, penalty may be imposed by the income tax authorities. And what is penalty? You see, penalty is some sort of punishment. So a penalty is a fine. It is a, you may say, some sort of punishment for doing something that is not required. That is not justified. For doing something, a penalty is a punishment for doing something that is not as per norms, or rather that is against a law. So that is basically penalty. And what is another main theme? What is another main thing that is to be remembered in case of penalty? That it is basically monetary in nature. It is basically monetary in nature. Like we were discussing about challan. So challan may be there. Let us suppose 2000, 3000 challan is there. In case of some, you have not obeyed some traffic rules. So that is monetary in nature. Again, in the same way, the penalty under Income Tax Act 1961, it is also monetary in nature. Some money will be charged from the wrongdoer, from the assessee, and it is basically a punishment and imposed by income tax authorities. But dear students, being student of law, being student of commerce, being student of any course, it is not so that only in commerce. You you should try to become, you may say, you must try to become responsible citizen, and you should be abiding by, you should make it a habit to abide by each and every provision of law, so that nothing that sort of penalty is imposed upon you by the income tax authorities. It should be avoided, and it is within our reach. We are able to avoid penalty. Now, I will be discussing some important penalties with you. In case we are discussing section 158 BFA subsection 2. In case some undisclosed income is there, determination of undisclosed income of block period. In case such income is there, such income is found, then what is the I will be discussing with you what is the minimum penalty and what may be the maximum penalty. So minimum, if we talk of minimum, 100% of tax leviable, 100% of tax that would have been levied in respect of such undisclosed income. So that will be the minimum penalty, 100% of tax, and it may go up to the maximum ceiling. The maximum limit is 300%. 300% of such tax that would have been leviable, that would have been levied in case all the income would have been disclosed. So it would be 100% of tax leviable in case of undisclosed income, and maximum penalty may be 300% of tax leviable in case of undisclosed income. Now we are discussing section 234, 234F. 234F. Basically, we will be dealing with what will be the penalty in case default is there in furnishing return of income within prescribed time period given in section 139 subsection 1. In that case, kindly note that the penalty will be 5,000 rupees in case the return is furnished on or before 31st December of the assessment year. In case it is submitted, it is furnished on or before this date, 31st December of assessment year. In that case, the penalty would be rupees 5,000 and it would be rupees 10,000 in any other case. One thing you should again note, my dear students, that in case the total income of the person doesn't exceed rupees 5 lakh, then fee would be payable and this fee would be rupees 1,000 only. Now, next important penalty, significant penal provision we are discussing, that is basically relating to underreporting. Now, when an assessee underreports the income or when an assessee misreports the income, so we are basically concerned with section 270A subsection 1. So kindly note that in this case, the penalty would be, kindly note, it would be sum equal to 50% of the amount of tax payable on underreported income. In case of underreported income, it would be some 50% of the amount of tax payable on underreported income. We are talking of penalty only. And further kindly note that in case underreported income is in consequence of any misreporting thereof by any person, then penalty would be equal to 200% of the amount of tax payable on underreporting income. So it should be noted. It should be kept in mind. And again, one thing you should note that penalty for underreporting or penalty for misreporting of income, such type of penalty may be imposed on the assessee by assessing officer, CIT appeals, or CIT, that means Commissioner of Income Tax, or Principal Commissioner of Income Tax. Now, next important penal provision is in case the assessee fails to keep or maintain or retain books of accounts, documents under section 44AA, 44AA. In case he doesn't maintain or he fails to maintain such accounts, such documents, then simply a penalty of rupees 25,000 will be imposed on the assessee. So it should be kept in mind. It should be imposed on the assessee. Now, what will be the quantum of penalty? What will be the quantum of penalty in case failure to furnish information and document which are required under section 92 D subsection 4. In case the information that was required under that section, but that is not, you may say, furnished in timely manner, then a very huge penalty, that is heavy penalty of rupees 5 lakhs would be imposed on the assessee. Again, kindly note, we are discussing with, you may say, presumptive income, and I am sure that you know the provisions relating to presumptive income. That was not while discussing various heads of income. So, what is there? You should note that in case 44 AB, in case section 44 AB is applicable, in that case it is the duty of the assessee to get accounts audited or furnish a report of audit as required under this particular section, that is section 44 AB. And in case assessee omits to do so, in case assessee fails to do so, assessee fails in complying with this provision, in that case, what is the penal provision? What is the penalty? In that case, kindly note, it would be 0.5% of total sales, turnover, or gross receipts, or rupees 1,50,000, whichever is less. So whatever will be the less from these two items, 0.5% of total sales or turnover or gross receipts, and on the other hand we will compare it with rupees 1,50,000. So whichever is less, that would be imposed as penalty. Now again, next. Kindly note that in case the assessee fails in furnishing a report from an accountant as required by the provisions of section 92E. We are basically discussing penalty under 271 BA, and it relates to when the assessee is not able to when the assessee has not submitted, not furnished a report from an accountant as is needed by the provisions of section 92E. In that case, again, you may say heavy penalty is there, and that is rupees 1 lakh. Then next part is in case, we are discussing basically section 271 double B, 271 BB. What is that? It relates to failure on the part of assessee to subscribe any amount to units issued under scheme referred to in section 88A subsection 1. So in case the you may say subscriber, or in our case it will be assessee only, in case he fails to subscribe in this matter, in that case 20% of such amount would be imposed as penalty on the assessee. Then again, dear students, I am telling you once again that various penal provisions are there, as it is the you may say it is the duty, and it should be there, that the chances of tax avoidance, the chances of tax evasion must be reduced to the minimum extent. And in order to, we are not teaching somebody a lesson, it is not so. But in case you are not fulfilling the requirements of law, in that case some penalty should be there, and the person, the assessee, would become more sincere, he would become more careful in future. So that is the purpose of imposing penalties. Otherwise, and lastly, we may also say that it would contribute something towards a revenue. Government is not there to earn money, increase revenue from by imposing penalties. In case you are sincere enough, in case you are very carefully submitting all the documents, in that case no penalty is there. Government is, it is not so that government is that you may say government impose penalty just to gain funds, more and more funds. It is not so. In India, at least, it is not the case. So, next penalty. It is concerned with basically we are discussing section 271DB. It is basically concerned with when an assessee fails in providing facilities for accepting payment through various e-modes, various electronic modes of payment as referred to under section 269 SU. You see, sometimes it becomes necessary. The government issues instructions to provide facility to they say to the assessee to provide facility for accepting payment through prescribed electronic modes. And in case the assessee fails in doing that, in that case, a penalty of rupees 5,000 for every day of default would be imposed by the department, by the income tax department on the assessee. Then next, you say, kindly note that under section 285 BA subsection 1, 285 BA subsection 1, kindly note, details are required to be submitted to the assessee regarding annual information return. So, in case assessee is under an obligation to furnish this return, to furnish an annual information return under section 285 VA subsection 1, but again, assessee has omitted or assessee has failed in submitting this return. In that case, penalty that is not too much, but penalty is penalty. It is basically 500 per day of default, during which the default will continue. Let us suppose it continued for 10 days. So in that case, the penalty would be rupees 5,000. Now again, in case, kindly note that in case we are discussing section 271F AA, and it deals with, let us suppose, assessee has furnished some information, but that information is not accurate. That information is basically inaccurate, and that information is related to statement of financial transaction or some reportable account. In that case, penalty is there, penalty is imposed, and that is the quantum of penalties rupees 50,000. Now, again, kindly note that as per section 115 WD subsection 1, it is a duty of the employer to furnish the return of fringe benefits given by the employer to the employee. So it is a duty of the employer, and we are discussing basically section 271 FP. And in case the assessee fails to do so, assessee fails in furnishing the return of the fringe benefits under the provisions of section 115 WD subsection 1. In that case, again, penalty will be imposed. Note it is not too much. It is rupees 100 for every day of default. Again, in case default continued for 10 days, so in that case, penalty will be rupees 1,000. Now again, kindly note it is relating to some international transaction. We are discussing section 271G. In case failure is there on the part of assessee to furnish any information, or let us suppose some document was required as per the provisions of section 92D subsection 3 relating to some international transaction, and this document was sought from the assessee, but assessee has failed to furnish such information, or assessee has failed to submit this document. In that case, again, penalty will be imposed on the assessee. And what would be the amount of penalty? It would be 2% of the value of such transaction, international transaction, specified domestic transaction. For each failure, it will be 2% of the value of transaction, and for each failure, 2% will be charged. And in case, and it is international transaction or it is specified domestic transaction, so it is but obvious that amount involved which will be much higher, and amount involved would be much higher, and the penalty would be 2% of that amount. So we should be very careful in dealing with international transactions or specified domestic transactions. Now, in case assessee fails to furnish the required report under 286 subsection 2, in that case, assessee will be penalized, and the quantum of penalty is it would be rupees 5,000 per day up to 30 days, and after 30 days, in case the default continues, in that case it would become rupees 15,000 per day. Now, let us suppose some information, some documents were required from the assessee, and some specified period was given under section 271GB subsection 6. But assessee has failed to produce that information. Assessee has failed to submit those documents within the prescribed time period. In that case, penalty would be rupees 5,000 for every day during which the failure continued. Then kindly note, we deal with again we deal with that some notice was issued. In the previous slide, we had just discussed that assessee has failed to submit the information or document. Again, you see some notice was issued. Notice was issued to the assessee, and again, even after receiving the notice, again assessee has failed to furnish a report, or he has failed to submit the desired information or to submit the desired documents. Again, even after receiving the notice, it has been properly served to him. Even then, he is unable to comply with the notice, with the demand in the notice. That the documents which has been demanded has not been produced. The information that is required, that has not been given by the assessee. In that case, uh, heavy penalty is there. It is basically rupees 50,000 for every day for which such failure continues, beginning from the date of serving such order. So it would be in that way. Again, kindly note, uh, in case we are dealing with section 271J, in case some information is given by the assessee in any report or in any certificate by an accountant or a merchant banker or a registered valuer, and that information is incorrect. That information is incorrect. So basically, incorrect information is being furnished. Incorrect information is being furnished in any report or certificate by an accountant, by a merchant banker, or by a registered valuer. In that case, the penalty is rupees 10,000 per incorrect certificate, or per rupees 10,000 per incorrect report. So it should be remembered, and it is the duty of the accountant, merchant banker, and registered valuer to give correct information as is needed. Otherwise, penalty is there, and it is charged per report wise, per certificate wise. Again, in case the assessee refuses, or in case the assessee fails to give satisfactory answer, or assessee fails to sign statements, or assessee fails to or refuses to give evidence, in that case, penalty of rupees 10,000 for each such failure, for each such default, would be imposed on the assessee by the department. So, various cases are there where such penalties, where such penal provisions may even be waived, or some relaxation may be given by the competent authorities. So that should also be remembered. So, okay, dear students, with this, we have gone through in brief. I am again telling you, we have just discussed in brief a few significant penal provisions. Otherwise, this chapter is very lengthy. And my sincere advice to you is kindly go through the detailed provisions also relating to penalties. Okay, thank you. Thank you very much.